Welcome back, guys. It is an honor for me when I do this podcast to be able to reach out to people that have been mentors to me in different areas. I've had Tom Sosnoff on here, I've Dr. David Buss on here. I've had several different people who've meant a lot to me. As far as my way of communicating, I've talked about this before. This podcast is about intellectual curiosity, and so Lex Friedman is a huge influence, and so is obviously Joe Rogan. But as far as the way I communicate, this man right now that I'm about to bring on, he is a very, very strong influence for me. So I'm glad to have him on. He is the former host of the Dylan Ratigan Show on MSNBC. He is a former contributor to the Huffington Post. He is the creator and the host of CNBC's Fast Money and Closing Bell. He was a former corporate finance editor at Bloomberg. He is a former senatorial candidate in the state of New York in the 21st District. He is a former political commentator for the Young Turks. And he was a contributor on ABC News. You can see his articles on the New York Times, the Washington Post, the Miami Herald, the Chicago Tribune, and he is also the author of a New York Times bestseller called Greedy Bastards. Please welcome the current co-host of the Truth or Skepticism, the current co-host of the Truth or Skepticism podcast, Mr. Dylan Ratigan. How are you doing today, sir?
Very well. Nice to see you, Michael. You're looking well. Congratulations on all your success. I appreciate and respect your work ethic. You do the work, and I think that it's paying off. So everybody wants it, but not everybody's willing to work for it.
Yes.
Really, you are.
Yeah, man, it's great. And honestly, I have a coaching program, and a lot of it, you know how Tom has a takeaway every 15 minutes with TastyTrade. That I took that from Tom. I do a lot of the stuff from Tom, and also I love the way you guys do a format. So for those of you who are interested, you definitely should check out his podcast with Tom Sosnoff called Truth or Skepticism. It's fantastic. So let's go into a couple of things, man. There's so many places I want to go with in this area. First off, you starting off at Bloomberg. Now, I've heard you tell lots of stories about this, how you started off in the whole financial media space and then eventually how you ended up leaving it, which is also very interesting. As far as Bloomberg is concerned, I just remember the story about you talking about how headlines were chosen where you'd open up a drawer and it'd be like bonds would go up and then this was the excuse and then bonds would go down and this is the excuse. And also how you mentioned that there were a lot of people that you work with that had never actually made a trade before. Can you talk about your initial foray into financial news?
Sure. Well, again, remember also there's a big contrast between my time at Bloomberg and my time at CNBC,
right?
Which is really where there's a really big contrast there. But starting with Bloomberg, and remember, I started at Bloomberg when Bloomberg I was a member of the last training class at Bloomberg that was trained by Michael Bloomberg himself when it was still I won't say it was a small business when I got there in 1990, winter of 95, but it was a medium-sized business with a very selective process for hiring and training that was controlled by Michael Bloomberg. I think the story that you're referring to is I actually wrote, there was a team of reporters that were assigned, a team of 4 reporters whose job it was to write you had to write 800 words a day on this U.S. stock market. U.S. stocks rose, U.S. stocks fell, U.S. stocks were mixed. And what would happen is you would collect quotes explaining why stocks were up. Stocks were up on optimism that growth will be better than expected. Or you would collect quotes on why stock was down. You know, stocks are down because fears of rates rising sooner than expected. Or stocks were mixed as the markets waited for earnings later this week, whatever the quote was, right? And then you kind of wait to see what stocks actually did. Yeah. And then if they were up, you'd be like, give me that quote. You know, stocks were up on optimism that earnings are going to be better than expected. Sounds good to me.
So these were actually written beforehand.
Well, what would happen is, so like there's one reporter who's writing the 800 words for the New York Times, for the wires. And then there's other reporters who basically support that reporter, whose job it is to call people like Tom Sosnoff or, you know, financial people and say, you know, give me a quote for the stock market column on Bloomberg. I need a quote, you know, I feel optimistic about globalization. The trade talks are likely to be beneficial or whatever it is. I mean, there's always obviously 1,000 reasons that can be conjured for anything. And then you would have a selection. You'd have 5 or 10 quotes to choose from. Some were up, some were down, And then you kind of wait till 4 o'clock because sometimes you'd be writing, you'd be like, stocks were up, stocks were up, stocks were up, because you had to do the story at 9 a.m. or at 7 a.m. with the futures, then 9 a.m. before the open, then right after 9:30, you had to update by 9:45, and then again at 11, again at 1, again at 3, and then you had to do a final story that was sent to all the newspapers, most importantly the New York Times, at 4:15. And sometimes you'd be writing the story, and the story would be up all day, and then whatever would happen, and then you'd be like, oh, stocks reversed, and then you'd be like, I need a reversal quote,
Yeah.
So, but it's sort of like, I guess, obviously, story that on some level, a story like that is an indictment of the credibility of the whole process. On the other hand, it's one of those things where everything is true, and nothing is true.
Yeah, well, I think
it kind of depends on your perspective at the time. So, do earnings and globalization and trade talks and interest rates matter to asset values? I would say absolutely they do.
Yeah.
But was a particular stock price or asset price this afternoon particularly impacted by one of those things? Who knows? And probably not.
Yeah, so that's the point, is that they kept trying to stick their foot in it. Like, no matter what happened, stocks went up or stocks went down, the answer could never, ever, ever be random market hypothesis. The answer always had to be,
of course not,
which is essentially the actual answer. It is the answer. The reason why the stock goes up or down is random market hypothesis. But that doesn't sell newspapers, and we can't just keep using that as a headline every single day. So what happens is, not only did stocks go up, they went up because of this reason. And the way you're going to know that is because you went to Bloomberg. The way you're going to know that is because you checked the New York Times.
So I would say that not just, and I would say Bloomberg, by the way, even to this day, is probably the best in the business in terms of the intelligence and quality and consistency of the work. But the trap that all financial media is inside of, whether it's among the best, I would say Bloomberg is among the best, or to some of the weaker or more celebrity focused platforms, all of them exist inside of the fundament of the structural belief that there has to be a fundamental reason for any action.
Right.
That asset prices do not move absent a fundamental reason. And I would say that that's the big gap between someone like Tom Sosnoff and TastyTrade, and for that matter, yourself, and incrementally more myself. I'm somewhere between what I would say Bloomberg sort of structural fundamentalism, which I do believe that fundamentally asset prices over time reflect enterprise value in some way, but there's a major breakdown in the degree to which any given day's asset prices are correlated to that long-term enterprise value, which is a different conversation. But I guess the point is, when you exist in a world where the only way you can explain a change in an asset price with a fundamental reason, then you are forced to go shopping for fundamental reasons to reverse engineer the explanation as to why asset prices did what they did.
So there has to be a belief, and it's very easy to sell people this belief, because it's not just traditional finance. You see this with cryptocurrency, you see this with Forex, you see this with binary options, you see this with penny stocks, you've seen this all over. It's not just that there's a reason behind it. It's that someone knows something, and that someone's not you, and that if you buy this course or subscribe to this magazine, that someone who knows the truth, who is the insider, is going to give you the information. And yet, if we were to actually graph this out scientifically, we'd find that that is absolutely, completely, irrefutably, unescapably not the case. Markets are random. But there's so many people who want to believe that Bill Ackman or Einhorn or Carl Icahn or whomever or Warren Buffett somehow has
somebody knows something.
Someone knows something. And by the way, to that point, Warren Buffett did know something, because there was an asymmetry of information back in the 1970s and 80s when he was researching these stocks. And he also gets better deals than other people because his name's Warren Buffett. But in that case, yes, that's true. But for the most part, for us as retail investors, the idea, like the very fact that somebody even comes to you at the Christmas dinner table and they're like, oh, flight to quality, go to gold, because it's a flight to quality. The very fact that someone even is, I joke about here, like when I go out here in Las Vegas and every stripper and bartender I know is all of a sudden selling real estate, that's a pretty big sign we're in a bubble, right? And then whenever I talk to people and people who don't know anything about traditional finance trying to shill me their next like shitcoin, like, it's a pretty good sign that we're in a bubble, right? It's one of these things where it's like when the information is getting to you, that means people who have far more money than you. Jim Simons is usually the example that I use. If you think that you have some sort of trading algorithm that's going to give you alpha, Jim Simons is going to stomp on you. Like, you have no way that you're going to be able to beat him, because no matter what you have, he has smarter people. He has physicists working for him coming up with trading algorithms. He's going to beat you in every case. So this idea that you're going to figure out a great example, and we're going to skip around here, but the whole myth of cryptocurrency being a flight to quality, right? So this idea that cryptocurrency, for ladies out there watching, cryptocurrency is a lot like the guy who comes home with you and he's like, hey, listen, I'm not like every other guy. I'm not a douchebag. I'm not going to not call you the next day. I'm different from all these other guys. And then turns out he's exactly like every other guy. Cryptocurrency was like, hey, I'm a flight to quality. I'm not going to act like traditional financial instruments. I'm going to be completely different. And then when the market crashed, Bitcoin crashed. The same. It was not a flight to quality. It happened exactly the same. The liquidity events that happened with the S&P 500, the exact same liquidity events happened with Bitcoin. So during the same time periods. And I remember a lot of my friends who are very pro Bitcoin or very pro crypto were they couldn't explain this. Like, how did this happen? It's like, well, because once you get into this $1 trillion range, you have these large financial institutions, and when they feel greed and fear, they're going to act the same way with their cryptocurrency as they do with their S&P 500 fund. So that was a sort of an interesting thing. What do you think about that specifically, as far as when we deal with stuff like, because you and Tom talk about this frequently about crypto, a bubble, is it, Tom's obviously very, very bullish on it. What do you think about it as far as being a speculative asset? Or I know you're very long crypto. What do you think about that specifically?
Well, I mean, so here's the thing, right? And I'm just going to go back in time a little bit, because crypto, remember, when I left Fast Money really in protest to the way they resolved the financial crisis in 2009, and went then and did the 3 years doing political commentary at MSNBC, which was a lesson in and of itself for me. That was right around the time of the birth of Bitcoin and some of these things.
Yeah.
And at that time was also when I was writing my book. And so I was thinking a lot about both markets, this crypto phenomenon that was just starting, all these things. And the place that I always come back to, and the issue that I have with crypto is the concept of intrinsic value, and the idea that an asset price theoretically, clearly purely theoretically, is intended to correlate to some future expected intrinsic value. Right? So stock prices don't reflect the value of the present value of a given stock. Sure. or security, in theory. The game that's being played constantly is a perpetual discounting of the perceived future value of an enterprise. Right. So Disney over the next 3 years is going to do this, and AT&T is going to do this, and this startup biotech company is going to get approved. Whatever the medley of information is.
Yeah.
And then there's some sort of interaction between that medley of information and then liquidity and then asset prices and then ultimately perfection of information and then ultimately the randomness which you and Tom speak of.
Yeah.
When it comes to currency, the best currency in the world is a currency that actually reflects some underlying value proposition. So I actually think the most interesting currency that was ever proposed in the United States goes back to the late 1800s in the time of William Jennings Bryant in the presidential election of 1896, where there was actually a movement to collateralize the US dollar as a currency with the intrinsic value of commodities and natural resources and labor in North America.
So I'm trying to understand. So all of them, like basically we would, just like how we were on the gold standard, this would be on the entire,
instead of a gold standard, it would just be what are the actual natural resources, including human capital of the country, the value of the wheat, the value of the oil, the value of the whatever. That is the underlying collateral for the currency, and that the currency then is a function of the underlying. That's the most fundamental That's the most fundamentalist view of a currency to this day.
Yeah.
Which, by the way, no one uses this. No one uses it, right? And so then they were like, oh, we're not going to use the actual value of the labor force or whatever, blah, blah, blah.
Right.
What we're going to do is we'll use the gold standard. Then they drop the gold standard and they end up with, okay, well, the value of currency being the US dollar I'll use, but it could be the euro or whatever, is, well, it's backed by the authority of the government to render taxation or to administer taxation, I should say, and the yield on whatever the interest rate is if you own bonds in that currency, blah, blah, blah. And so then you migrate to cryptocurrency, which is actually a great opportunity to invent new forms of collateral for currency. So if Michael does a very nice thing for his brother, or he builds a house, he actually does something that society deems valuable, whether it's, I'm not going to, I'm not going to decide what society deems valuable. Maybe it's valuable for you to smile and be friendly. Maybe it's valuable for whatever. And every time Michael does something of value, then the Michael coin rises in value, right? And then you theoretically with crypto could create, I actually had a concept for a cryptocurrency going back to 2012 or 2013 that I was calling bullcorn, okay? And and bullcorn was collateralized by the crowd's opinion of the merits of your action. So you would say, well, I just did this thing, so Michael just went skydiving or whatever it is. I'm like, bro, that took a lot of bullcorn. And so now, you would get a bunch of bullcorn for whatever you did, or some small amount. This is probably more than you wanted to hear, but I want to get it off my chest because you have a nice format for it.
Yeah.
What disappointed me about cryptocurrency at its birth was that the collateral was really electricity.
Yeah.
And that I'm like even in the 1800s they were like, maybe we can use wheat, maybe we can use oil. Even with fiat, they're like, oh, at least I can put you in jail and collect taxes. Like that's a real thing, whether you like it or not. The use of electricity, and so that I think that it's at its outset was a weak hand. I think that cryptocurrency's value now is only as high as the potential utility of the blockchain as a record-keeping mechanism for transactions and assets. So if I can sell my house, it's on the block. And so and that's where honestly Ethereum to me is far more interesting because it has, and then the evolution of smart contracts and all that, because I do think crypto has a lot of value as a record-keeping mechanism for transaction and data processing.
Yeah, no,
but again, that doesn't speak to the crash. The crash is I would rather. I mean, listen, I own both the S&P and Robinhood and Bitcoin and Ethereum, and they're all down.
Yeah.
So I don't know what to tell you. I don't know that there's a safe haven in any of that.
No, there is. The point is there isn't a safe haven. The point that I was trying to make before is that like there's always this new paradigm. Like when the market goes up for 8 years in a row, we start to believe that there's this new paradigm that the market will never go down. And then when people who skipped traditional finance, they get into cryptocurrency and they're like, oh, all you fuddy-duddies and your fixed income and
old man money,
your old man money and your standard deviations and your normal distributions. We don't worry about that here in the crypto world. We all have neck tattoos and felons that fucking sell us, that have fake watches and try to sell us like that. We're just selling us, what's it, Forex 6 months ago, and now they're trying to sell us Bitcoin. The thing about it is,
and it pays 10,000 to 1.
It pays 10,000 to 1. The thing for me, and I've talked about this before, I'm a very big bull on cryptocurrency. The problem is the way it was marketed to me in the beginning. It was marketed to me with this like bro culture, and trust me, I live in Las Vegas. I'm very familiar with this bro culture. It's just I know what these guys did beforehand, and these guys were all shilling penny stocks to me, a couple years ago, and now they're selling me Bitcoin, which does not to me in Bitcoin. They're selling me whatever coin that they're trying to sell, or now NFTs. These same guys, like I party with some of these guys. I love some of these guys. I just don't really trust them from a financial standpoint, and they're trying to sell me this stuff, and it does not led credence to what it is that's going on. Now that these large financial institutions are getting involved, and now you see arenas being named, which I do think laid some credence to this whole thing. When you see arenas like in Los Angeles and Miami being named after crypto funds or named after crypto brokerages, I think that is sort of changed the game.
And Matt Damon fronting and all the the other things.
I mean,
right?
I mean, doesn't that, I don't know, like, you bring up Dogecoin. I didn't mean to get to this so early, but the whole Dogecoin thing, which it was a joke. It was a joke. Like, I don't understand how
Dogecoin was a successful bullcorn.
Yes.
My bullcorn was meant to ridicule Bitcoin.
Yes.
I never got, Dogecoin was the successful mockery of Bitcoin.
Yes. Yeah, and like a lot of people don't. I guess maybe here's the point I want to leave people with. I believe in blockchain. It's fantastic. This whole idea that I have all these nodes that can verify my transaction with somebody. Right before, you and me would go hit some guy up on Craigslist and go meet him out in a dark alley and get robbed. Right? We don't have to worry about that anymore. We have Bitcoin now. We have blockchain that can authenticate through a worldwide ledger our transactions. Brilliant. Absolutely think it's brilliant. But that doesn't mean that necessarily that in the 23rd century we're going to be carried by specifically Bitcoin or specifically Ethereum or specifically Monero. We don't know which one of these things is going to do it. And what I have a problem with is people who are clearly just trying to get rich, and they're using a speculative asset to get rich, and they're proclaiming as if it is their fundamental belief in Jesus Christ that this is the blockchain that is going to change the world, and you are socially irresponsible for not investing in this cryptocurrency and therefore taking the power away from the banks. And it's like, that's not what you're doing either. You're just trying to get rich, just like everybody else, and you're sitting there espousing the greatness of blockchain. That part of the hypocrisy is the issue that I have, because
that's the most offensive component for sure of the culture. Can I ask you a question?
Yeah.
Who's collecting that money on the gas fee? You know what I'm talking about with the gas fees?
Yeah.
How do we get in the business of collecting the gas fee?
Are we talking about gas fee? You're talking about individual gas taxes on I'm
talking about like when you mint an NFT onto the blockchain.
Got it. Yeah.
And they charge, gas, they call them gas fees. Does anybody know who's collecting that money? I feel like I'm always on the wrong side of that deal.
Right. So it depends, I think, depending on how so with Bitcoin, there's nobody. I don't think so. You actually award the additional.
Right, but Bitcoin doesn't have the ability. You can't do it. You can't print an NFT on Bitcoin.
Okay, I see what you're saying.
You can only mint an NFT on Ethereum, and Ethereum. Anyway. I want to know who has all that money.
I would guess because I have some friends of mine. You find this very interesting. I have some friends of mine that were Playboy models, and Playboy doesn't do nude photography. They don't produce a magazine anymore, and so they will not pose nude unless it's an NFT now. And when they do so, like I have a friend of mine, Kindly, hers is up for $600,000. Like only photo of her nude in the entire world. She's posted it right now, and she the opening bid is $600,000. $600,000. No, nobody's taking it yet, but maybe they will. The point of it is she gets the original percentage minus whatever the minting cost was. I don't quote me on this. And then she gets 10% of every additional transaction from this point, royalty in perpetuity. That's all I know about that specifically. So I can't answer the question specifically. But I'm guessing whatever administrator created that thing is probably the person getting that gas fee. Yeah. That's probably the closest.
Anyway, crypto is both complete and unadulterated bullshit and worthless. And it's also one of the most useful platforms for the future of all commerce ever. So figure out what that's worth.
Awesome. And there's your TikTok clip. Beautiful. Good to have you, Matt. All right. So now here we go. Let's go back to what we were talking about before, because some of the most famous things, and listen, I go on rants all the time. And part of me is like, I have permission to do this because I saw Dylan Ratigan do it once. And it's just so powerful. And I know you've been critical of it before, but anybody who's watching this, please press pause and go back and watch the rant that you had. I believe it was back in 2011 when you were talking about the extracting of the American people. It was just so powerful and it was so real. And the thing that made it so real there were these two entrenched politicians sitting in front of you, and the way they were taken aback by somebody actually speaking truth to them, maybe for the first time in their entire lives. And seeing that, how powerful it was, I don't even know if you understand how much that meant to a lot of other people to see somebody, because listen, man, you're a guy in a suit on television. You're one of them to us watching on TV. And you're one of them telling these politicians this thing that we kind of know, and none of us can articulate it anywhere near as well as Dylan Ratigan can. So that's why when you listen to that, that's why millions of people have watched that clip and other clips like the one you did for on Bill Maher's show, and then the other clip where you had that one gentleman talking about, I can't believe, about the extraction of natural gases, and you're like, oh, so what's the solution? And the guy kept reading off talking points to you, and you finally cut him off. I think that was one. That one was true.
And then there was one on the Middle East. There was one on healthcare. there are 3 or 4 of them, but one in particular was the one that I think most people are familiar with.
So let's go through a couple things first. In '04, you cover the Enron crash, which was a big thing to me because I graduated from UT Austin in 2000. I couldn't find a job, in part because the Enron crash just collapsed the entire IT market in Texas during that time period. And then you won an award for that. Is that correct? What was that whole thing about?
It was, I mean, again, I was part of a team of reporters,
right?
And I was a lead reporter on that team. It was a Gerald Loeb Award.
Yeah.
But again, because I entered financial journalism at the exact moment that financial deregulation really took hold, which was in the middle of the 90s. You know, I came in pre-internet, before Windows 95, before Netscape's IPO. These are probably names half people don't even know. Before this, UUNet and the sort of backbone companies had come out, and was educated in that transition through the late 90s. That then, once you got to the late, let's say 99, and it was like, oh, the computers can do all these things and blah, 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 blah. Well, then all of a sudden you have, well, we'll do credit default swaps so we can create infinite pools of credit, and we'll do decimalizations. And Bernie Madoff at the time was a very respected, old man on Wall Street. We're talking about what's possible for the retail investor and the narrowing of spreads. And then one of the other things that came from that first technological wave was the idea that you could optimize the narrative, I should say, that you could optimize for the trading of energy, which is where Enron and Ken Lay, who was the CEO, came in with the idea that they could smooth out the same way that credit default swaps were supposed to smooth out credit risk, but ultimately basically served as financial morphine that allowed a huge catastrophe to occur. Enron was a function of energy deregulation, specifically in the California markets, where, again, same narrative, really in a different genre, being energy as opposed to credit, where we can now use the infinite computing power of all these modern computers to smooth out energy prices and do it in a way that is profitable for companies like Enron. But the story is, but valuable it'll end the blackouts, it'll smooth out the price spikes in the summer, whatever, all those things. Unfortunately, just like the credit default, like when you have extremely powerful tools, which, again, same thing really goes for crypto in the modern moment. So as we migrate to a world with infinite computing power and infinite record-keeping power and almost pervasive and perfect information sharing, to your point with Tom in terms of market, and it's easy to fall in love with the narrative of what's possible because of all that opportunity and all that efficiency and all that connectivity. But the more powerful the tool, yes, the more significant the potential is, but also the more effective and more severe and more rapidly it can be used to destroy.
Yeah.
And so what you saw with the credit default swap was, on the positive side, we can use all of the trapped capital and all the fixed assets in the world, and we can use it as collateral for credit insurance such that the people of the world have more available credit. Bill Clinton loves it because what politician doesn't love giving away credit? Bob Rubin loves it because what investment banker doesn't love giving away credit? And the consumers love it. Who doesn't love getting no interest, no down payment loans on a house, or no interest, no down payment loans on a car? So the consumer's in love, the bankers in love, the politicians in love, and it's disastrous, right? Same thing with the energy markets, and in some ways, same things with the crypto markets. I think that Tom and I talked about this on Truth or Skepticism at some point in the past few weeks. There's a cycle where there's a technological invention, and then there's the application of that technological invention, whether it's to the credit markets or the energy markets, or, in this case now, in the modern application to this crypto or I'll call it the blockchain, Web3, or whatever you want to call it, the tokenization, the infinite record keeping. And then inevitably somebody or a group of somebodies figure out how to exploit it for extreme short-term wealth, but in a way that is catastrophic for everybody else. And so that we saw catastrophic for all the shareholders at Enron, catastrophic for everybody who lived in California at the time, because they actually all of a sudden had rolling blackouts and there wasn't power available.
Yeah.
And so, that's, I'm not sure if I'm answering your question, Michael,
No, this is exactly perfect, because what I wanted to do was actually talk about your introduction into corporate malfeasance and studying that and like trying to find that out. Because what happened was, when you get into that, and then like you said before, right? It happened to be right place, right time. You get into financial news when this deregulation happens, and then you are first front row witness to what happens with Enron, and then later on the 2008 financial crisis, and then later on.
Even before that, I was front row to the original bank mergers in the 90s.
Yes.
So I watched them put it all together, apply it, and then I watched it I watched the beginning, middle, and end of that whole thing.
These are huge whales that you were able to kill, like over the course of your, or to hunt over the course of your career, and that's the reason why I wanted to bring this up. What happened in 2004, and then in 2008, I didn't know you were on Oprah. What was that like? You went on Oprah Winfrey to talk about the 2008 crash?
I did. That was my only appearance with Oprah. That time period between, let's say, 2007 and 2009 for sure was the peak of my sort of pop culture financial celebrity, let's call it. The show in Times Square and the crowd, all the audiences, and Conan on Conan's show and on Jimmy Fallon's show and on and all the shows, Stephen Colbert. And so, one of those was Oprah. I learned early on. So I was the morning television host the day of September 11th at Bloomberg that day. And while this is obviously a substantially different event with the financial crisis, if you are an expert in markets and finance, everybody wants to talk to you when they're afraid and when there's a catastrophe.
Right.
So no one really cares to talk. The only people that want to talk to you when things are normal or going well are other idiots who like the stock market, like you and Tom Sosnoff and my friend, right? But Oprah doesn't care, right? Or Stephen Colbert doesn't care.
Yeah.
But those people, it's only when it feels apocalyptic that all of a sudden everybody wants to talk about it. And so I would say the Oprah appearance in 2008, like, there is no bigger indication of a market bottom than Dylan Ratigan talking about. Like, if Oprah has Dylan, you got to buy him. Because if Oprah is worried about this, it's sort of the opposite. If you're like, well, if the shoe shine guy or whatever is selling you cryptocurrencies, that's a top. Or if Elon Musk buys Twitter, that's a top. Well, the bottom is when Oprah has Dylan Ratigan. Like, if all the people Oprah could have, especially back then, because that was Oprah also, by the way, is not the woman she used to be in the sense of her celebrity, right?
Yeah.
Like, she's not, like, at that point was back when Oprah was really Oprah. It was like every day is Oprah, this thing. And so to answer your question, what was that like? I used to do 4 or 5 hours a day of live television for years at that point on CNBC. Morning thing, afternoon with Maria, Fast Money, and then there'd usually be one other thing, something. No one cared what I said. No one cared what I wore. Like, I didn't get no one. They're like, oh, how'd it go? Oh, yeah, whatever. You want a hamburger? Sure. But I got 2 minutes, or probably not even, 90 seconds or on Oprah. And I've never, my agent in Los Angeles, the head of the network, they're like, what are you going to wear? Make sure you get your hair cut. Nobody cares what I'm going to say, by the way.
Yeah.
What suit are you going to wear? Make sure. Do you need to get your teeth whitened? And so, I don't know. There's something surreal about that. I think because the Oprah appearance occurred in the middle of so many other things, Like, it wasn't like nothing was happening and all of a sudden Oprah wanted to have me on her show. It was like everything was happening. It's like when there's chaos,
Yeah.
like Stephen Colbert this and this one this, and all of a sudden you're like, of course, Oprah, sure. Like it's like when you're in the maelstrom of a moment like that, it makes sense. Whereas after the fact or before the fact, it doesn't make sense. But at the time, it was. I just remember, to answer your question, what was it like? I've never had more people who otherwise did not care what I said or what I did take an interest in which tie, which suit, and my haircut.
That's awesome. That's great stuff, man. Yeah, a buddy of mine wrote a book and he calls it Fame Brain. He wrote a book called The Setup, and he talks about fame brain, where like when it's like it doesn't matter as soon as you're around these celebrities. People that, like you said before, nobody cared about the content of what you said, just the fact that you went on Oprah. I didn't find the clip anywhere, so I don't even know what you said, but it was just very interesting that I saw that you went on Oprah.
It's just a status symbol to say that you went on Oprah.
Yeah, I talked to my friends about this. We call it pre-selection is one of the terms for it. But like if you're at a JUCO and some kid comes in and all you know that he was recruited by Alabama, well, you know he's probably a good kid because he was recruited by Alabama. You don't need to know anything else, right? It's like, was Dylan Ratigan popular in 08? Well, he went on Oprah. Like that's what you want to hear. You know what I'm saying?
Or like, if you're doing if you're doing a tech or a company or a space, if you have something, you're like, well, is Michael any good? You're like, well, he worked at Tesla.
Yeah.
And you're like, okay, well, if they worked at Tesla, he must be pretty good. Like, I don't, hire him, Is
Michael's podcast big? Well, I had Tom Sosnoff and Dylan Ratigan on. So there you go. That's the exact same thing right there.
That's all you need to know.
That's all you need to know. Okay, so I want to talk a little bit more about, because I've had situations before, and it's not quite the same subject matter as you have, but something took you over in 11. So first off, in the 2008 financial crisis, I want to talk about this. You've mentioned this before, nobody being prosecuted for some of the things, some of the malfeasance that's happened. It's been 14 years. I know a lot of like new traders don't even remember what happened. Can you describe that? Because I think that's sort of like more evidence for we're going to get to this later, your beliefs about how the government works and how about political corruption. We had this massive crash that happened. You talked about the subprime mortgage crisis and the collateralized debt obligations, which basically the way I try to describe to people is like, hey, I'm making a bet that I won't default, right? And if I default, I don't care because I'm out of business. And in order for you to get the money, guess what? You got to get it out of my dead body. So I'll go ahead and give you as many of these contracts as you want. That's essentially why the credit default swaps didn't work. Can you describe what happened as far as the crash? And then how do you think all of these corporate entities just managed to get away without nobody going to jail?
Yeah. I mean, well, it goes back to the late 90s and the idea, well, now that we have this massive new computing power, we are able to calculate, instead of doing a traditional credit assessment where I'm like, well, does Michael have a job, or does Michael, whatever, does he own a home? Sort of more traditional indications of creditworthiness. Because of the computational explosion in the late 90s and the sort of consumerization and then the corporate application of computational power, they invented this idea of credit insurance that was predicated or calculated based on the computer's assessment of the probability of future repayment having nothing to do with anything else. And so the idea was that the supercomputer has conducted its mathematics, and it has determined that we're now so efficient in our calculation that basically I can lend 99 cents, or excuse me, I can lend $1, and I can guarantee that 99 cents of that dollar will get paid back. That was an indication of the efficiency of the credit calculation capacity. Okay. And that was revolutionary because that's what allowed it. And then all of a sudden it's like, well, everybody can buy a house. Everybody can buy a car. Like because now these robots have decided that they know that everybody's going to pay it back, or that they can calculate who's going to pay it back and how and when within 1% of accuracy. And the reason I use 99 out of 100 is because the leverage that was being used, the collateral that was being held was for every $100 that was issued in credit insurance, $1 was held in collateral. So I lend out $100 and I keep $1, and I can do that because my robots, my computers are so smart that all I need to have is $1 to issue $100 worth of loans, and now I'm collecting $100 worth of loan interest, and all I have to put up is $1.
Yeah.
Better than crypto.
Yeah.
Okay. Because I'm getting whatever percent I'm getting yield on $100, but it's getting paid on $1.
Yeah.
But that's what happened. Then 06, 07, 08, all those things, it starts to reveal itself that, well, hang on, maybe it's not going to be $99 get paid back on $1. Maybe it's 98. Maybe it's 94. Maybe it's 86. Maybe it's 71. Right? And all of a sudden you owe $30, but you've only got $1.
Right.
And when that happened, even to this day, when that happened, I really gave the bank CEOs and the treasury executives and the like the benefit of the doubt, because I always presumed that they were smarter than I was.
Yeah.
And by the way, that presumption might be correct, but it doesn't mean that they were right in this situation. But my point is, I would always try to defer to understand, what is Hank Paulson thinking? What is Bob Rubin thinking? What is Jamie Dimon thinking? I consider these people, even to this day, brilliant individuals who have incredible domain expertise in the world of traditional. And so I'm like, okay, well, what's happened here is not a crime. It's not a catastrophe. It's not terrible. It's just a revelation that the calculations in the computational power, as it was conceived in the late 90s, and as it birthed itself out into the marketplace between 2000 and 2008, was wrong. Okay, like, it's still a good experiment. It's still a good idea to use computers to issue credit. I don't like the fundamental underpinnings of the idea, to me, are not wrong. It just means that the calibration and the calculation in the credit algorithms was incorrectly calculated.
Yeah.
So for me, I expected that other people like Rubin, like Paulson, down the line, would conclude a similar conclusion, which is, okay, well, we preserve the integrity of this overall system using computational power to calculate for future default risk and then calibrate for credit issuance. But at the same time, the way we were calculating it clearly has failed. And so we need to do, one, we need to recalibrate that calculation. And two, we have a bunch of CEOs and boards of directors who have compensated themselves over the last 10 years based on the financial results of that flawed calculus. And so we need to claw back that money, because they were paying themselves as if there was not going to be a default for the last 10 years. But then it turns out there was a default. And so their personal comp of $1 billion each for the last 5 years turns out not to have been warranted.
Well, Dylan, I don't even think it's that. I think they didn't care if there was going to be a default. Like I'm
sure you're correct, but I'm just saying, like, as I try to presume, I try to just maintain the benefit of the doubt through the process.
Yeah. And
so that's what I thought would happen. And instead of them doing that, their solution was, we, the government, the taxpayer and the government, will fund AI. So after all the failures work their way through the system, where the default at Golden West in California makes its way to the default on the bond book at Morgan Stanley, makes its way through the counter trade with the bond book at Goldman, or as it sort of worked its way through the system, the floor on all of it was AIG, because AIG was the biggest issuer of the insurance on the credit. So whether you're Morgan Stanley or Goldman Sachs or Golden West or whoever, everybody's final backstop was AIG. Or not everybody, but a lot of the market's backstop was AIG. And so when the decision was made for the US government to make sure that AIG paid out 100 cents on the dollar on all of those claims and made everybody downstream whole as a mechanism to make the entire financial system solvent, and at the same time assign no consequences, no clawbacks, no meaningful collateralization, and no investigation of the CEOs and the boards of directors who are the culpable individuals. It's the chief executive and the board of directors who decides risk exposure, whether it's at any bank. There is no liability for those individuals, whether it was at the insurance companies or the banks, and there was no clawback, and there was really no collateralization. And that, to me, was when it transitioned from, oh, this was a failed experiment that needs to be recalibrated, to, oh, this is the largest theft and cover-up in the history of the world.
Yeah, that does seem. When you go back and you listen to it, also I know Tom is not a big fan of Michael Lewis, but when you go back and read The Big Short, and you can see that there were normal retail investors who were like, hey, this isn't going to work. Let me explain to you why this isn't going to work. And you said you saw it as well, and you expected that there were people up there that were smarter that were going to figure it out. I kind of I compare it to Lance Armstrong taking performance-enhancing drugs during the Tour de France, where it was one of these situations where, like, well, could I get caught? Yes, but I'm getting, like, how many times do I need to get paid $10 million before I'm rich, first off? And second of all, what if everyone else is doing it? Like, how bad is this really going to be? And if you look back, like, Lance Armstrong's a famous guy who gets paid to speak even to this day, right? And so it's one of these situations where we were talking about before about the golden parachutes. We as you know, sitting here talking down from the bottom of Mount Olympus, looking up at these people like, oh, I would never do that. How many times, those of you who are watching this program, would you incentivize yourself if you could write your own contract to where you got a $50 million parachute for whatever you did? How many times would you do that? Or like, what would you be willing to do for that amount of money? And you start to see, there's a great book I recommend you read. It's called The Sociopath Next-Door by Dr. Martha Stout. And at the end of the book, she starts talking about corporations acting as sociopaths, but they're not staffed with sociopaths. What happens is, because the total collective is only interested in shareholder earnings, what happens is their behavior starts to mimic that of a psychopath. And that's essentially what you saw in these type of situations. Individually, these people went to church, paid taxes, loved their children, and didn't cheat on their wives. Maybe I'm just speculating. But as a collective, their behavior became that of, let's follow the crowd. Let's only worry about the money, because if we don't, we're going to get fired. And if we do worry about the money, we're going to get $100 million parachute. And so that what happens is
it's worse than that, because the structure of the system demands that you behave like a sociopath.
Yes, that's exactly. Yeah, exactly. Or you get fired.
Optional.
It's almost like being a cartel leader, right? It's like, what if the next cartel leader comes, a Mexican cartel leader comes, and this guy's a nice guy? Well, he's dead in a week. He's dead. Like that sort of job selects for that type of individual, or somebody running for president of the United States having certain narcissistic qualities. Well, of course, otherwise he wouldn't be running for president of the United States. Like, it's one of these things where that type of job selects for that type of individual. For you to be cutthroat enough to become the CEO of one of these companies in the first place requires a certain level of ambition, education, fortitude.
But not only that, you have a structure. I mean, I'll tell you a true story where you have the bond trading desk at Lehman Brothers, and you have the bond trading desk at Bear Stearns. I'm just using these two because they're the ones that went down. But that's neither here nor there. If you're the CEO of Bear Stearns and I'm the CEO of Lehman Brothers, the CEO of a bank really only has 3 jobs. 1, determine total aggregate risk exposure for the bank, how much leverage and where. Sales, any sales function at every level, right? Whether it's one-on-one in private dining rooms or whether it's big speeches. And then internal leadership and culture, right? It sets the culture of the firm, one of the most important salespeople in the firm, and then determines risk exposure. So if your job is risk and my job is risk, and your bond desk just got their bonuses last year of $1, and my bond desk, which does the exact same thing that your bond desk does, got their bonuses, but their bonuses were $1.50. And the only reason my folks' bonus was higher than yours is because I allowed a more lenient risk policy, so I let them take on more leverage, and it happened to work because it was whatever.
The PEDs.
So now your bond trader. your bond traders are going to come to you and say, okay, Michael, either you grow a pair of balls and open up the risk, or we all quit. We're going to work for Ratigan.
Yeah.
So then you're like, okay, fuck Ratigan. I'm going to, and now all of a sudden now they're up for $2. And so there's even if the CEO doesn't want to increase even if he's like, it's not a good idea to be running anything at 100-to-1 leverage. Like, it just doesn't end well.
Yeah.
Even 50-to-1. There's no room that 100% there's going to be some unexpected that is going to cause this thing to be beyond catastrophic. But I don't want my entire bond trading desk to quit. And so this is the chicken dance we're on. And so, I'm all in. And that's kind of what was happening between 2004, 2005, 2006, 2000, and then it kind of reaches its conclusion.
So the leverage is like the PEDs. The leverage is like the steroids, right? The leverage is like everyone else in this industry is taking these steroids. We have to take them also, or else we're going to quit. We're going to go play for the NFL team where all the guys are playing roids because we want to win a Super Bowl. So that's what, and I think a lot of people don't understand, because we sort of target these individuals and not understand that, well, they get put into these human being. I've said this before. Again, the book behind me, it's Evolutionary Psychology textbook by Dr. David Buss. I do believe we're all hairless murder apes to some extent, and we are a product of our environment as far as stimulus is concerned. We behave differently based on how we are the carrot and the stick. And in these situations, we had created a financial incentive for, just like we talked about with financial media, we had created a financial incentive for these people at these large financial institutions to reward themselves, to reward the shareholders, be damned whatever the future was, and don't really worry about any sort of financial responsibility or who you hurt or how many defaults happen. Because like Charles Barkley says this, how many times do you need to make $50 million in order to be rich, right? And they're not going to take it.
But here's the thing, okay? Because I spent a lot of time both in financial media as well as 3 years every day with a political talk show that was directly beamed into Congress and the president and in the White House and all the things. And then I wrote a book on this. I mean, I'm just saying I've spent a lot of time on this subject.
Yeah. Okay.
And so what it boils down to is this, in terms of, I understand the principles of evolutionary psychology, some of them principles of evolutionary psychology, behavioral economics. At the end of the day, I believe that every outcome in every situation forever is a function of two things. One, base incentives for resource and social status.
Yeah.
And skill at exercising social primacy. So people that are attractive, or people that are extroverted, or people that are funny, or whatever the things are that create social influence or social primacy in leading a group and leading a company and leading a country. The original rules of the game were written in 1999 with the structure of the swaps and blah, blah, blah. So then the bank CEOs and those boards of directors were playing by those rules. And the rule was he or she who can take on the most leverage wins. And that's exactly what happened. And those individuals made a fortune. Anyway, I'm making the same point that you're making, which is why I find political discussions so pointless, because the political discussions are prevailed over by the idea that if I just got the right person to be the president, or if I just got the right person to be my congressperson, well, then, everything would be, I don't believe that. It goes also to your point about, good people in corporations will still behave like a sociopath, because the incentive structure of the corporation will reward sociopathic behavior. And so as long as we have a political system that the actual candidate process, and I can speak from experience having run for Congress, that the candidate selection process seeks to reward people that are the best at character assassination, information distortion, and fundraising.
Yeah.
So if you're really good at raising money and you're really good at destroying other people's identities through explicit and nefarious means, then you are most likely to be the next congressperson from your district. So now I've created a systemic filter where I'm filtering for groups of human beings that are the best in the world at begging other people for money and destroying other people's reputation.
Yeah, that's crazy. Yeah, no, that's
so now that's who your Congress is, and then the structure anyway it goes on and on and on and on, and until you, I mean, and that's why. And no, this is where it starts to get, wild and woolly, right? Because we're not the first people to make this observation. That's where that's why you have revolution, right? That's why people are like, well, the answer is communism. The answer is socialism, because they want to create different incentive structures. But what they even in that those most extreme of examples, they don't account for the fact that the basic structure is that a few people will control most of the resources in every system. Communism, a few people will control most of the resources. China, or previously the Soviet Union. I won't recount all the examples, and I'm not sure that there ever will be a system where most of the resources are not controlled by a few people.
Right. You mentioned before on a different podcast, you said something about how you believe, it was the James Joseph's, I think, his podcast, where you talk about you felt that you have changed over time in what your belief in the role of government is. Initially, you thought that it was something that could be fixed, and now your belief is that both of the political parties are both corrupt. And can you expound on that?
Well, I wouldn't even say, I mean, for sure, both political parties are corrupt. I mean, I think that's self-evident at this point to anybody. I don't think that requires explanation for most people at this point. I mean, remember, the biggest political party in America is people that are not a member of either of those two political parties.
Right.
I mean, I have 10 to 1. Okay. I mean, the minority in this country is people who are members of either political party. And even if you are a member of the political party, the real minority is people who actually vote in primaries, which is, 1 in 100, or some ridiculous number. So I think that's not the fact that the two political parties are corrupt is not even in dispute at this point. It's more the merit of whether that's worth discussing, and then the bigger question is, well, how would you fix it, and blah 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 blah. I think that the government has a massive opportunity to influence the basic rules of how resources move around. And the single biggest tool that they have to do that is the tax code. So the culture and the values of a country are expressed in the tax code. And so ignore all the rhetoric. The American tax code, as it's written, is designed to make sure that young boys and girls who have dreams of going from having small amounts of money to working really hard in Las Vegas or Los Angeles or San Francisco or New York or Miami or Chicago or Dallas or wherever, and getting an income, the tax code is designed to make sure those people get as little money as possible. So the whole idea of the American dream, as done through work in collecting any kind of salary or any W-2 income, is the American tax code is completely against that. The American tax code is very much in favor of transferring wealth from within wealthy families, which is very European. It's very much against accumulating wealth through hard work. It's very much against generating income, right? We have our primary means of taxation is income tax. Again, I would tax income last. Why am I punishing you for generating an income? I want you to generate. Good job. Keep it, right? I would much sooner tax consumption. If you want frivolous consumption, you want to buy extra houses, you want to buy ridiculous sports cars, which, by the way, I kind of do, but there should be a tax on that. I would rather see a tax on I would rather see luxury taxes and high-end consumption taxes and, you know, sin taxes, smoking, whatever, than income taxes. But the point is not my opinion on what you should or should not tax, because I think that the point is that the political debate should be about what do we tax, and that we don't even have that political debate. And then we say, oh, we're going to raise taxes on the rich. And then we're like, well, what's the tax? And you're like, well, if you make more than $400,000 a year, we're raising your tax. And you're like, well, hang on a second. Like, most of the people that are making more than $400,000 a year have had to work their ass off and live in the highest cost of living places in the country.
Yeah.
But at the same time, you don't want to put a billionaire's tax. Why are you starting? Why is the target of your taxation hardworking young men and women in Los Angeles and New York and Las Vegas and Chicago who have been putting in 100-hour weeks, and now they're a fancy lawyer, or now they're a fancy PR person, or now they're a fancy technology person, or whatever. So they're making $450,000 a year. Well done. All of a sudden, they're the ones who have to bear the tax. They're the target for your taxes, not the wealth transfer inside of families, not the estate tax, honestly, not a billionaire's tax. But again, the government's job is to determine the rules for the flow of resources. What is the collective decision, right? And the problem is politicians say, elect me, Dylan, and I will decide the best way to allocate those resources because I'm a good guy. That's what the system we have right now. That's why it's complete bullshit. As opposed to saying, you can't trust anybody to make that decision, obviously. And so we need to have some form of collective decision-making to establish the tax code, which determines the incentives for where and how resources go. And our current decision is that income is an abomination and needs to be taxed out of existence, which is inexplicable.
Whereas capital gains, we don't tax at that same level. And also we have companies that put several of their assets offshore in other tax havens, like whatever, Scotland or Panama or wherever, Monaco. And they do these kind of things, and then we don't tax those people. And so like it goes back to your point where it's like there's this middle class. Like for instance, for somebody making $70,000 a year, you hear about a guy making $400,000 a year. Forget about the fact he lives in Fisherman's Wharf or he lives in Manhattan. He lives in those places. He makes $400,000 a year. In your mind, that guy's rich. He's the problem. That guy's the rich problem. But really, you're actually talking about the billionaire. You're talking about the 10-figure guy. He's the one getting taxed nothing. The famous example is that Warren Buffett pays less in taxes than his secretary because his income comes from his assets that he owns, right? And a lot of people use that as an example of why you need to buy stocks and bonds. And a lot of people use that as an example of why we need to reform the tax code. So really, really interesting.
And again, regardless, and I'm sure everybody watching this has their own opinion of taxes and what's rich and what's not, and may agree or disagree with anything I've said or you've said, but that's really that's not my point. My point is the tax code dictates the flow of resources in every country in the world.
Yeah.
And if you're not fundamentally drawing the tax code in a way that reflects some collective set of values, so we have national values that are entrepreneurial, the American dream, anybody can make it here, blah, 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 blah. But we have a tax code that does everything to make that as hard as possible. And if you look at the actual statistics of the number of people that are born in one economic category and move to another economic category, economic mobility in the United States is lower than Europe. The European narrative is not if you're born the son of a shoemaker, you can become a king. The European narrative is if you're born of the son of a shoemaker, you shall be a shoemaker. The American narrative is if you're born the son of a shoemaker, you can. The American tax code makes it as hard as possible for the son or daughter of a shoemaker to accumulate any assets so that they would even have the opportunity to own stock.
So let's transition there. Let's go back to so we talked about '04 and '08. Let's talk about the rant that you did go on in 2011. So somebody watching that out of context, you actually say that the American people are being extracted. Can you describe, because you talked about several things, including banking and the tax code, which you just brought up now. Can you explain what you mean by, and again, I highly recommend everyone who's watching this, hit pause, go watch the rant that Dylan goes on. Can you talk about what you meant by specifically about the American people being extracted?
Sure. So in any relationship, whether it's between two people or between a country and a greater million people or anything in between, every single interaction and every single thing that happens between you and me or between you and I and the government, or it doesn't matter at every scale, from the smallest to the largest scale, every interaction either is one that is creative in nature and produces new ideas, new energy, and new value, or extractive, where one party removes value from the other party by either taking information or taking money or taking energy. Or in many cases, it can be mutually extractive, where both parties are extracting from each other. The most obvious example on a personal level would be, a divorce or something like that, where it's just mutually. So just so you understand what I mean when I say extraction. In the context of that rant, I was really using the word not so much from an energetic or an emotional sense, but from a financial sense. So if I lead you to believe that I'm creating value for you, and I persuade you to give me your money, but I'm actually not creating value for you, I'm just basically scamming you, conning you. And then at the completion of that relationship, you now have less money and I have more money. That would be an extraction, right? So if I have bullcorn, my own bullshit crypto coin, right? And I sell it to you for $1, it cost me nothing to make it, and you give me the $1, and now it goes back to being worth nothing. I've extracted $1, right? And so when I say that the American people are being extracted in that rant, what I mean is that the members of Congress and that the members of the executive branch and the federal government are misleading the American people with the lie that they are being offered a value from this government, that the government is here to provide you health care, or the government is here to provide you whatever it is. By the way, that's not an endorsement of private healthcare. That's a whole other conversation, which I'm happy to have. But my point is the government represents itself as offering value to the people, which then is self-perpetuating for the government, but is not valuable for the people, because the people are being extracted by a tax code that punishes people who work, that punishes people who generate income at every level, one. It also administers a trade policy that punishes American labor for the benefit of offshore labor. So you have trade policies, you have tax policies, and then you have bank lending and credit policies. And whether it's bank lending and credit policies and the way credit has been managed and made available, whether it's the tax code or whether it's trade policies, all three of those are the three primary levers of economic opportunity and resources, are being maneuvered by the leadership of the banks and the leadership of the government at the expense of the American people. And the American people then are led to believe that it's the Democrats' fault or the Republicans' fault or the women's fault or the men's fault or some identity's fault. And so there's this round robin of blame, whether it's within the identity circle or whether it's in the political affiliation circle or whether it's in generational circles. And that perpetual cycle of blame is the very foundation upon which the extraction is built.
Yes. Yeah, beautiful.
And so the reason that the extraction in the tax code, in the trade policy, in the bank and credit policies can perpetuate itself is because of the brilliance of exploiting human nature's desire to find a villain, someone to blame, and that perpetual blame game is what prevents a reconciliation or a revolution. And I mean that in the not in the violent sense, but a change in the way that government and bank and trade policy and forget government, the way tax, trade, and bank policy functions. Because if you don't address bank, trade, and tax policy, which are the three levers, you're not doing anything. And so, and the way they prevent dealing with trade, tax, and bank policies is through distract, deceive, delay, deflect, etc.
It's interesting. I like the analogy of John Democrat and Joe Republican are having a knife fight in the middle of the street. And I called Dylan and I was like, hey, man, do you see this knife fight? This is crazy. We get all our friends and we're watching this brawl that's about to start while the bank behind us is being robbed and nobody watches. That's what it feels like to me. It feels like Rowdy Piper and Hulk Hogan fighting each other in the ring, and we're going crazy. And I got my Rowdy Piper shirt on. You got your Hulk Hogan shirt on, and we're buying tickets to watch this fight. And then at the end, they go back and have a beer and swap wives. Like they don't care. The best photo, I love this photo, is the one of, I believe it's Donald Trump at a Hillary Clinton fundraiser. And they're like hugging each other. And there's this meme, it says straight out of options. And it's just like, we have this belief, this fundamental belief that this is going to insult a lot. I'm about to lose a lot of subscribers here. There's this fundamental belief that you think, for those of you watching here, there's this deep down ideological difference between Joe Biden and Donald Trump. And there isn't. There are two old men who went to really nice schools who have both made horribly racist comments and have both been charged, like accused of sexual assault. And we had to choose between one of these two 70-year-olds to be our president and the people on the right who all believe that everyone who voted for Biden was some child molester, and the people on the left who believe that everyone who voted for Trump was some incredible racist. It's just like you're so passionate about this belief, but that's because that's the narrative that was being taught to you. And so now you're a Republican fighting Democrats, you're a Democrat fighting Republicans, instead of being an American citizen fighting this system that was made to extract you.
But not even an American citizen, an earthling.
Yes.
Because even the Americanization of self it is another form of identity. But anybody who has dealt with another human being from another country, whether they're from Mexico and Canada or Japan or England or Saudi Arabia or Russia or China, bunch of people, man.
Yeah.
Like the entire construct is an illusion. Yes, there are cultural differences. But at the end of the day, every human being in the world wants to feel secure. They want healthy relationships, and they want a sense of purpose in their lives. And every single government, on some level, is abusing them to one degree or another. And there's not a government in the world that's not abusing its people on some level.
Yeah. Individually, they are also, like with Jingoism, like our government and our people are more important. I was reading the other day, 70% of Russians don't believe that we landed on the moon. Do you know this? Like, this is like propaganda that they teach people in Russia. We never landed on the moon. That whole thing was made up. And then we in the United States, I will tell you this, to this day, I still cannot believe this. Growing up, this is true. I've heard people debate this. I will tell you, I was a witness to it. They taught me in junior high in the state of Texas that the Civil War was not fought over slavery. I actually heard those words coming out of my social studies teacher. Stuff like that, where we just like sort of, we as a government, we sort of use our own propaganda to teach. Again, in the United States, we teach our children that, and by the way, the 500,000 people, the American troops that died during World War II, we can never forget their sacrifice. The reality of the situation is the Russians lost 25 million people. And I did not even learn about that until after college. Really, the way it was taught to me was that Patton and Eisenhower went in there and just killed all the Nazis. And that's not essentially what happened.
If you really want to offend a Russian, tell them that the Americans and the British won World War II.
Yeah, exactly. Reality of the situation is like they
fall out of their chair.
Yeah, no, it's like they got mollywopped. Like they lost 25 million people, and we don't ever talk about that. Not to say that what the
Russia won World War. Russia defeated Germany.
Yes,
I mean, but that's neither here nor there.
The point is the propaganda.
Yeah. The point is there's one group of human beings on the whole earth.
Yeah.
All of whom are being manipulated on some level, all of whom are churning around each other. And being an American or a Italian or a Japanese or a Russian or a Chinese or a Saudi is just another form of it's just another identity.
Yes.
So it's no different than being a black person or a white person or a gay person or whatever. And every identity is important. It's not to diminish the importance of those things, but those identities are not the central factor in the decisions that affect the economic resources of the people of the world. The economic resources of the people of the world are determined by tax code, trade policy, and bank policy, which was my point going back to your question in that rant in 2011. And the reason I was so frustrated because I've been listening to this blather about political parties and identities, about whose fault it is about the debt, the national debt, or whatever the idiocy was.
Right.
When all of the very discussion of trying to determine whose fault it was in and of itself enabling the ongoing theft.
Yes. Can I ask you about this? You've mentioned on a different podcast about the experience of running for political office. I'm really, and I know you've said before you thought it was a mistake. I'm always very fascinated by your experience when it came to this and the different things that you learned from running for. You ran for Congress in the 21st district in New York.
New York.
Yeah. Can you talk about that experience? What you thought was going to happen and what eventually did happen?
I thought that something or anything that I said would matter.
There you go.
I thought that maybe out of every 100,000 words that I said, one of them might matter.
Right.
What I learned was that not a single word that I said mattered. No word that I spoke, no action that I took mattered.
What did matter?
And that my gender and my skin color.
Wow.
And being a white male in the year of the woman was all they, was it. I literally showed up at the first political event. One of the other political candidates stood up and basically read an indictment of me as if I was Harvey Weinstein, accused me of being a rapist, accused me of being a misogynist, all these things. Baseless. I mean, CNN actually assigned a reporter to try to find the Me Too takedown for me. Could not find it. Right? It doesn't exist. But the point is not. By the way, that's now. I'm like, listen, I've been vetted. Okay.
Yeah.
Like I had every congressional candidate in the race plus CNN call every ex-girlfriend, all of my old staff members. Like, you have no idea. And they're there. It was like, look, anything, give me something. My point is that I thought that and I would say that anybody running for Congress, that the illusion or the delusion is the belief that what you say matters. And really what matters is your social profile relative. So I was running in the Democratic Party primary where basically social identity was destiny. But it's the same thing functions in the Republican primary. So the two things that dictate congressional outcomes, the first and most important thing is whether the district is gerrymandered. And because remember, 85% of the congressional districts in the United States are gerrymandered to ensure that they're always controlled by Republicans or always controlled by Democrats. So there's really only 10 to 15% of all of the congressional districts where it's even possible for there to be a change of some kind. And so the thing that determines the political outcomes is the gerrymandering. That's the most important thing because that really determines it. And then the identity of the candidate relative to the cultural phenomenon of that election year.
Right.
So if you are if you're in the right political party in a district that's gerrymandered in that political party's favor, that's the most important thing. And then if you represent the cultural aspiration of the zeitgeist of that political party in that particular year, that is also beneficial. But those are the only two things that I think actually matter.
You mentioned before about money in politics, rank voting, and distributed finance. Can you describe those things as kind of a way to get money out of politics, or that money in politics is the biggest scourge on the entire system? Can you?
I would say a couple of things. One, so yeah, it's sort of like communism versus capitalism, where it's like who controls the money. You want to have it in the private sector. You want corruption in the private sector, or you want corruption in the public sector. Either way, you're going to have corruption, right? And so, kind of both of those suck. And so that's why I advocate for this idea of mandatory giving. Like, if you really wanted a healthy political system, you would basically tell everybody in America, one, it's illegal not to vote. Two, you're given $200 or $500 that you must donate, required that you must donate. So then it becomes like a sports thing where I'm like Michael, what do you? You're like, I'm going to give $10 to Sosnoff. He's running. I'm like, you're an idiot. You can't give $10 to Sosnoff. He won't even take the beret off. They'll never elect a man in a beret. Or whatever it is. So I would say if you had mandatory voting and mandatory contribution, but with a cap at $500 per person or entity, so that you cannot have this super loan. It's a sort of the political equivalent of DeFi, right? And then so if you have the mandatory giving, you have the mandatory voting, and then you eliminate the political parties and use ranked choice voting, where I eliminate the value of character assassination. So the most important thing for ranked choice voting is the easiest way to get elected right now is to annihilate your opponent. Like that again, that's what they're like. Dylan Ratigan is a bad white man. But then they're like, okay, next, right? If you eliminate the incentive to assassinate the character of other people in the way that we vote, and in fact you create a disincentive, a punishment for character assassination behavior, so that the person who is the character assassin moves to, let's say there's 5 candidates, so that person moves down to number 5. So ranked choice voting eliminates the incentive for character assassination and diminishes the value of the political parties in terms of controlling the ballot. And mandatory voting and mandatory contribution expands the total pool of data and depowers individual wealth as being relevant. So again, if I was the political, overlord for a day, that's what I would do. I would do ranked choice voting, distributed election finance, and mandatory voting, and eliminate and open primaries. Like, again, political parties have to go away. They're not. They are the structure. The primary backbone of the corruption is the political.
Got it. Yeah, no, this is all really good. Especially the part about we were saying before about distributed finance, about having a small amount that everyone is required to give. I think it kind of goes back to what Tom talks about before, is when we get to like liquid markets, when it comes to this kind of stuff, and we'd be able to, what is that website? I think it's the University of Iowa has a website where you can actually there's
predict it.
Predicted markets on political elections, and how interesting that whole thing was. Let's talk about this, your relationship with Tom Sosnoff. So you came from this traditional finance background. I knew who you were. Tom was a big fan of yours. How did he originally approach you? And then how was Truth or Skepticism born out of that? I think we lost you for a second.
Tom just kept emailing me, and I just kept Tom just kept emailing me, and I just kept ignoring him.
Yeah.
But he was relentless. And so finally I responded to him just because I wanted to explain to him why he was wrong.
Okay.
So finally I got on the phone with him. I said, listen, I said, your entire premise is flawed. You are doing nothing more than, I said, Sosnoff, this is the first time I ever talked to him. I said, what's the best performing stock market account in the history of the world? And he's like, what? I'm like, he's like, what? I said, it's a Fidelity account that someone forgot they had.
Yeah.
And 30 years later, they come back and they're like, oh, no kidding. And I basically started breaking his balls about the width of the spreads, the fees, especially on multi-leg options contracts, and ordinary income tax. So when you throw ordinary income tax on top of the commission structure for multi-leg spread trading, on top of the brokerage commissions, even if you're a rock star, you're doomed. And Sosnoff basically said to me, I will pay to fly you to Chicago if you come out here next week, and I will explain to you why you're wrong. And I said, okay. And so I flew out to Chicago, and Tom basically said, I don't disagree that the friction of commissions and spreads and blah, 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 blah are an issue. But my entire purpose is to eliminate those things and open the possibility for people to be able to actually understand how to get out of the business of having a point of view in the traditional sense, in the fundamental sense, and into the business of selling premium against price extreme.
Yeah.
And that to me was not, if not compelling, it was intriguing and very credible. And then Tom said, in fact, I will pay you to come here and tell me why you think I'm full of shit.
And that's where the Truth or Skepticism,
in order to give me an opportunity to explain to people like you that think I'm full of shit why I'm actually not. And so our relationship was born by him hiring me as his chief skeptic. And then, here we are almost 10 years later.
Yeah. So I guess my question is, why do you think, and you do come from the traditional financial traditional financial media,
Sure.
Why do they, it's not that even that they hate him, they just ignored that he exists, Tom, and then other financial companies, they ignore him and then copy what he does. For those of you who don't know, you're watching this right now, your zero fees on your stock trades, that came from Tom. That was him before Robinhood did it, before anybody else did it. That was with TastyTrade. And several other things. Those of you who trade options contracts, your weekly option contracts, guess where that came from? That came from Tom. For those of you who look at implied volatility rates on your Thinkorswim account, guess where that came from? That came from Tom and Thomas Preston. You got those of you who are on the Thinkorswim platform right now, guess where that came from? That came from Scott and Tom. And a lot of people, it's almost, I was looking at your Wikipedia. I don't know if you're aware of this, Dylan. There's not a single mention of TastyTrade anywhere. And it's like that never existed. It never happened. It's so crazy to me when it comes to MSNBC or Bloomberg or any of this kind of stuff, it's like they act like he doesn't exist. And then he sold 3 brokerages for $2.1 billion. But yet he's still not, it's like he's the boogeyman. And to be fair, when they call him for a quote, he does tell people to go fuck themselves. But in general, like, why do you think financial media is just, it almost seems like they want to erase the fact that TastyTrade or that Tom exists?
I obviously have no idea ultimately why. I would speculate on a couple of things there, which is one, financial media needs the structure of a fundamental story in order for it to exist. So financial media lives on the foundation of some fundamental story, interest rates this, trade policy this, earnings this, whatever it is. And then they need the celebrity of a small number of mega cap CEOs, whether it was Jack Welch in the past, or whether it's Jeff Bezos, or whether it's Steve Jobs. So they need stars, right? Star fund manager, star analyst, star CEOs, and they need fundamental stories, whether it's Bloomberg, whether it's CNBC, whether it's the Wall Street Journal, whether it's the New York Times, whether it's the Financial Times, doesn't matter. The underlying ingredients for the totality of the existence of all financial media is based on some aspect of fundamental information and some collection of celebrities. Tom and his entire structure and his entire approach is there's not a single one of your fundamental stories that matters. And there's not a single one of your financial celebrities that matter. And so if I walk up to you and you say, it's the NFL, and the NFL is like, well, we require a field that's 100 yards long and a football. And then somebody walks up and says, actually, to play football, you neither need the 100-yard long field nor the ball. Now you just have 22 guys in shoulder pads, standing around in a circle. And so when Tom walks into the room and says, none of your fundamental stories matter and none of your celebrities matter, your financial celebrities matter, it renders the in totality of the meaning of everything that every one of these people do meaningless.
Yeah.
And so no one, like if I walk up to you and I tell you, Michael, Las Vegas is meaningless, podcasts are meaningless, people with dark hair are meaningless, people who wear black t-shirts are meaningless, people with blue walls behind them, totally meaningless.
I've heard all these, yes.
You would be like, let's not have Ratigan back. Like that was fun, right? And so when they call Tom and Tom says, everything you do is meaningless, it's intrinsically alienating to them. Now, the intellectually curious person would say to Tom, how could you possibly say that? How can you say that? And I've had the privilege of being able to interview him now really for hundreds of hours over the past decade. And I know his answer to that question. I've asked him countless times in countless ways, how could you say that? And I know how he can say that, and I know why he can say that. And once you understand why he answers the question that way, you realize that he's not trying to take away the football field and the ball. He's not trying to take away fundamental storytelling or earnings or whatever, or the celebrities. He's just saying that if you want to manage money in a way that creates returns, that focusing on those fundamentals and that ball is not the way to do it. And so it's not that he's actually saying that your blue wall or your black t-shirt or your Las Vegas studio is a problem. It's just that he's saying those are all wonderful and interesting things, but they aren't the key to your success and your purpose in your life. the key to your success, and so going back to Tom's market aspect, it's not that fundamentals, and so people they misinterpret Tom, I think. They're like, oh, well, Tom just thinks fundamentals don't matter because and Tom says that, I think, really for shock value, hoping that he'll meet someone smart enough to ask him, how can you say that? Why would you say that? What do you mean when you say that? As opposed to somebody who just, walks away. And so that's why I think that he doesn't have as there are people that are much less accomplished, obviously, many people who are much less accomplished in the financial world, but are much more celebrated in the financial media than Tom, to your point in recounting some of his resume. And I think the reason for that is because he believes that the way to make money is based on a more sophisticated understanding of risk and a belief in distributed information that is at or near perfection, that renders fundamental information of no value, but that provides a different kind of value in providing the opportunity to sell premium the way that we've discussed, and also in learning how to use options as a way to reduce the cost basis in owning anything.
Yeah. I mean, I think there's a couple other things. I think also he wants you to, as an active investor, that's threatening to financial institutions that are the sponsors for these financial networks. I think that's one thing. I think the other issue, as far as Tom is concerned, and I think this is probably the most detrimental thing, is those market measure segments. Those aren't his opinion. He goes off and he will back test other people's experiments, and he'll show, hey, absolutely, what is it, buy in May and go away? All this stuff. He tests every single, there's hundreds and hundreds of market measure segments where they back test going back 15, 20 years. And in every one of them, we find the same thing, that markets are random. And that's, I think that one of my favorite ones is the one where the earnings report before anyone else, and therefore you go long if earnings are better than expected, or go short if they're worse than expected, and you end up exactly at 50-50. And like even if you know the answer to the test before the test is taken, you still get the same score. Once again, proving markets are random, thereby de-emphasizing the financial news. Markets went up because of Fed announcement. Markets went down because of jobs announcement, which after being a trader since 2012, or active trader since maybe 2011, I can tell you emphatically that is true. Like, these markets are random. Markets move and nobody knows anything. And when people tell you they know something, go back and ask to look up their predictions on when that Corona crash was going to happen, or tell me about how you knew that the invasion of Ukraine was going to happen. You didn't. And so I think that's a really important.
Or that the ruble was going to be stronger today than it was before the war.
Right. Incredible. Again, these things, and they're supposed to make sense. And a lot of things at times they don't make sense, which goes back to my original point, which is if you even know about that, then it's already too late. Right. If you, as a retail trader, have any piece of information, that means the world has that piece of information, so it's already baked in. Like, everything's already. If you have to ask the question, if a piece of information is baked in, the answer is always yes. Simply by the fact that you are asking the question, that means the information's out there, and therefore it is baked in. Speaking of Tom, I have a question here from Tom. Tom wants to know, where do you get your amazing memory from?
When did you get a question from Tom?
I got him before the interview. I asked everybody for questions for you.
Genetics. I would have to give it credit to my parents and my grandparents. It was, my memory was the best when I was very young. It was out. I can remember at one point, being as a child sitting in a room where I wasn't even participating in the conversation, and then having someone after the fact ask me what was talked about in that conversation, and then recounting the entire conversation word for word, which I could not do now, by the way. And even being that was remarkable to me, even to me. But it's in the genetics, and it's not what it was, because now I'm not 10. So.
Tony Battista wants to know, what's your opinion on marriage?
I think that so I would say, I would put it in two ways. I think that having a meaningful relationship with another person is one of the most valuable and important things a person can have. And if doing it through marriage is the way that you do that, I think that that's wonderful. But I think that marriage at marriage, when you remove marriage from the importance of and the value of the meaning in a relationship between two people, marriage is the worst economic contract ever conceived.
I knew it. I was waiting for this. No, I have not.
But it was also, I think, listen, I don't even think, I don't have to say, I think marriage was conceived as an economic contract.
Correct.
To transfer assets tax-free between wealthy families in Europe.
That's what we talk about in these books. That's the evolutionary psychology stuff. Yeah, the Sumerians using it in order to maintain wealth amongst small groups of people by keeping them married. There was no, regular people didn't have surnames. Only wealthy nobility had surnames. They would get married, and so they would be able to maintain wealth. It's also another reason why the clergy in the Catholic Church can't marry, because they didn't want the clergy to inherit some of these other people's wealth. They wanted that wealth to stay amongst the private nobility. So yeah, you're exactly right.
Marriage is a tax-free asset transfer contract.
That's exactly right. Yeah.
That has been intermingled with the natural desire for bonding.
Yes.
But they're really two completely different things.
Another great point I like to make is that people think that Romeo and Juliet, right, it was written 400 years ago, is some sort of like romantic story, and it's not. It's a dark comedy. Romeo and Juliet is because at that point in time, we look at Romeo and Juliet when we read William Shakespeare, we think of it through the 2022 lens of, look at these romantic children choosing who they marry. William Shakespeare was saying, look at these idiot children defying their families and then killing themselves for no reason because they were choosing who they marry. Because 400 years ago, we weren't choosing who we married. This whole idea that came along where we grow up and we choose who we marry, this is something that coincides with the consumerism.
That's what I'm saying. So if you marry, well, look at Prince Charles and Lady Diana.
Yeah.
Right. So the marriage is done for social and economic reasons.
Yes.
And then affairs and lovers are kept for personal reasons.
Right.
And the two things, the expectation is not that there will be fidelity. The expectation is that that people will be discreet.
Yeah.
Right. So Prince Charles' failure with Diana and Camilla was not that he had a wife and a lover. It's that he was indiscreet and people knew it. That's the failure.
Yeah.
The point is, marriage is a economic contract that really has been inappropriately laid onto one of the most significant. What's the definition of human happiness? Meaningful social bonds.
Yeah.
One of the most significant of which is a romantic sexual bond.
Yeah.
And then a sense of purpose, a reason to a sense of purpose in society. And so, marriage is not required for either a sense of purpose or for romantic or sexual bonding. Marriage is only required for tax-free asset transfer and preservation of wealth.
But if you read a Hallmark card or watch ABC, you are told to believe that it does. And that was exactly the point that I was trying to make before. I went to the McCombs School of Business at UT Austin, and in front of the McCombs School of Business is a mother, a father, and they're holding a child. And the intention is to show that the family unit is the basis of consumerism in the United States, the basis of our economy. And I personally, this is my opinion. Again, I'm not trying to shit on love. If you guys fall in love, this is a completely different discussion. We're just talking about the legal ramifications of marriage.
That's why you have to separate marriage from love is real.
Yeah.
And love is critical.
Yes. But
marriage doesn't have anything to do with it.
Yeah. The point being is it's a lot harder to lead a revolution when you have two mortgages, I'm saying, a car payment, a wife at home, and some children. And it's a lot easier to get that person to buy the second car, the second cell phone, to take out the mortgage, to take out the fourth credit card when they're in that situation. And so I also believe that this whole idea of we choose who we marry is tied in with like modern American consumerism. It's a way to keep us spending. That's just my personal belief. But then again, I have no debt and I've never been married. So that's just that I'm biased. Right.
Yeah. No, yeah. But there's for sure truth. I agree with you. I mean, the economy is driven by household formation is an economic statistic that is measured for a reason.
Yeah. And there's nothing wrong with that. Like, for instance, the majority of the wealthy in this country are married. I was reading a really great book I recommend everybody read. It's called The Millionaire Next-Door, and they go over the stats of most of the Americans' millionaires, and it's really interesting the way it goes down. Like, the vast majority of them are on their first wife. So it's really interesting stuff when you talk about that. And they don't spend, like, I don't know if you know this, the majority of millionaires have never spent more than $300 on a watch. They've never spent more than $1,000 on a suit. Most of them had spent like something like $400, most expensive suit they'd ever bought. Stuff like that you end up finding out. But the consumerism is something that people who are not millionaires use in order to try to show higher and higher status. And that's the whole thing that kind of fits into the whole thing. I know a lot of people who own Lamborghinis who can't pay their rent. They rent Lamborghini. You understand what I'm saying? Or they have a fake watch to try to impress other people. Anyway, we're getting off the topic. This is the last part that I wanted to talk to you about, Dylan, before I let you go. And I call this part Ratigan for president. Okay, so I'm going to ask your opinion on certain topics, and then Dylan Ratigan, the political candidate, or Dylan Ratigan, the person. What do you think about some of these things? And the first one I want to talk about is tech monopolies, free speech, and then specifically Elon Musk and Jeff Bezos. Where is the balance there between, and we can talk about specifically about the possible purchasing of Twitter, which looks like it might not be happening now, by Elon Musk. Where do you think the line is drawn between the tech monopolies and their power and then our ability for free speech?
So here's the thing. The modern invention of the network effect, where a network is only as valuable as the totality of the people that use it, is a modern invention, right? And so people think that the value is in I've created my own social network and I have the technology to do the social network, or I've created my own brokerage company, or I've created my own stock exchange, or whatever it is. We're actually creating your own stock exchange, or creating your own social media network, or creating your own brokerage is relatively easy, but creating a crowd of human beings who trust it and use it on a regular basis is almost impossible.
Yeah.
And so when you finally have that crowd of human beings using your network, whether it's Facebook or Twitter or Instagram, which I think is sort of what we're talking about right now, or the network effect, for that matter, of Amazon, right? Then you create a bizarre situation where, let's say there's 10 of us that have created networks, and they're all the same exact technological capacity, but one of us has done a better job than the others in creating the crowd, the dynamic crowd to use the networks. There's 9 networks with no one on them, and 1 network with everyone on it. And then the network that has everyone on it becomes a self-perpetuating virtuous circle, because no one wants to be on the network that has no one. Everyone wants to be on the network that has someone.
Yeah.
Right? We're now sort of at some sort of a timeout period from this process, after having been through it for whatever it is, 10 or 15 years, where certain networks have sort of gone, because once it's going, it's unstoppable, right? That's what the network effect. It's almost impossible to create, but once it's been created, it's literally impossible to stop.
Yeah.
So 99.9999999% of all people who create networks fail because they can't create that density. And the 0.0000001% of the networks that succeed are guaranteed to be monopolies, because a network only has value if it's a monopoly or semi-monopoly. Like, the whole point of the network value is everyone's there. That's the point of that. The reason that everyone is there is because everyone is there, and everyone's there, then no one will be there. But because everyone is there, then everyone is there.
Yeah.
It's a circular logic. That's all. Oh, that's natural phenomenon. Fine, fine, normal, normal. What are you going to do? That's just human. That's just the way it is. Where the flaw comes in is the individual who happens to own the equity in the company that owns that network suddenly starts to believe that they have done something that has all this value. So all of a sudden, Mark Zuckerberg believes that because it was Facebook and not MySpace or not GeoCities or not whatever, a bunch of names of networks that no one's ever used or heard of, that Mark Zuckerberg is more valuable or that his opinion is more meaningful than anyone else.
The Mark Cuban effect.
Or the Elon Musk effect, for that matter now, right?
You made money in one area, and therefore you are an expert in everything else you talk about.
But this is even more sinister than that, which is you happen to have the network that it became the network, the standard for the global network.
Yeah.
And now you believe that happened because of you.
Right.
When there are a billion factors that may have caused that to happen, the majority of which are out of your control. That's one point. But there's another point that's more significant. The value of the network is not created by the company that owns the network. The value of the network is created by the people that use the network. And so, from an antitrust standpoint, I'm not inclined to break these companies up if I was president, because the very existence of the network is fundamental to its intrinsic value.
Yeah.
But I am inclined to restructure the cap table such that the equity is distributed more broadly and to the benefit of the people that drive the most activity on the network. Mark Zuckerberg doesn't create value on the network. The people that use Facebook, and Facebook is so passé at this point, I don't even know what's a good example.
Well, no, Facebook owns WhatsApp and Instagram, and Instagram is still the most. I don't care what people say about TikTok. Instagram is still the place.
The dominant platform.
It is the purveyor of value. Yes.
So I'll use Instagram because we'll consider that the king of the hill, right?
Yeah.
The Instagram users are the ones who create value on Instagram.
Yeah.
But the profit from the value of the network is collected by the Facebook shareholders, and the largest of which being Mark Zuckerberg.
Yeah.
And so my antitrust activity in that as president of the United States would be to preserve those networks and encourage them, but to restructure the ownership of those networks, one, so that the equity is much more widely distributed to the users, and two, I would make it illegal to do targeted advertising. Can either be, if you want to be an advertising network, you can do that, but you cannot be a protected monopoly network and also do advertising. So if Dylan and Michael start a little network in Las Vegas, and we've got a website and whatever, we can do advertising all we want because we're not a fundamental communications. We're not a, they call it in the banking industry, systemically significant financial institution. I would say that some of these communications networks are systemically significant, and the systemically significant communications networks should not be able to do target advertising and should only be subscriber based. So my two reforms would be no targeted ads. Yeah, if you're going to be a communications network, then you have to do subscriptions. You can't do advertising, and the equity has to be distributed to the value of the network user.
So you would treat it like a utility?
No, I would treat it like a subscriber business.
Okay, got it. I mean, I like the idea of treating it like a utility, just because one of the things that I've had a problem with is it seems, based on the political beliefs of the people running the network, your account is suspended or not without due process. I've had a massive issue with that because all the people that I know that build their businesses, whether these people are online coaches coaching a program, or these people are models, or these people are whatever they're doing, their celebrity is based on their social media presence. That is also sudden change now based on their political beliefs. And I've had an issue with that, because if this was a public utility, they'd be protected under the First Amendment. You wouldn't be able to do that.
Yeah, and I don't disagree with that point of consideration. But the current structure is the worst of all worlds because you have a few number of individuals who believe that they know something that no one could possibly know, and surely they don't.
Yeah.
Whether it's Musk, Bezos, Zuckerberg, any of them. It's absurd. Like you said, it's the Mark Cuban effect.
I mean, yeah. Donnie Nelson, he's the one who drafts Dirk Nowitzki and Luka Doncic, and then they fire him, and then Donnie Nelson, or then Mark Cuban starts a bunch of other companies, and I don't want to get too far into that. I'm a Dallas Mavericks fan. That's the reason why I bring him up. Sorry. So let's go into this. You talked about this, so we're going to bring a couple of things together. You used to have very, very heated debates on your program about the United States and our spending on petroleum that was actually funding terrorist states. And then let's take that into 2022, where we have all this money from Germany that's going to buying Russian oil, which then ends up funding an invasion of Ukraine. I'm just curious, like, what is your overall feel? And then also how that ends up leading to things like, we'll get into inflation here in a little bit, but what do you think about that as far as petrostates and your current belief as far as petroleum is concerned?
The petroleum is sort of a necessary evil. Mm-hmm. So again, for whatever you want to say about it, it's the only reason we're doing this podcast.
Yeah.
It's the only reason we're going to have dinner tonight. The only reason to drive to the gym. I don't know what to tell you. Like, it's just what it is. Okay. And over time, I think it'll become less relevant, but I think it'll probably take much longer than people think. And that also is what it is. My point about petroleum and terrorism in the past was not so much was that if you really do want to defund Saudi Arabia, I was talking about on Bill Maher's show, then stop buying their oil.
Yeah.
Which is then the same logic people are using with the Russian invasion. And they're saying, well, if you're against the Russian invasion, stop buying their oil. The problem with that is it's all structural. So if America stops buying Saudi Arabia's, the oil is a fungible, the oil is the opposite of an NFT, right?
Yeah.
They're the most fungible token in the world. And so Germany doesn't want to buy it. Russian oil. Guess what? China will. India will. South America will. Doesn't matter, right? America doesn't want to buy Saudi oil. Who cares? And so I'm president. Am I still president? Are we still in the part where
we're still, you're running for president. Yes.
I thought I was president.
Okay. Your Ratigan is president. There we go.
Running's the worst.
Yeah.
So the solution to energy in terms of petroleum is very simple, which is that you imagine a website, myoildividend.com. Okay. And imagine there was a gas tax that was equally distributed to everybody in America. So it was not a gas tax that went into the slush fund of politicians to pay off their cronies. It was a gas tax to disincentivize the use of inefficient fuel systems, to incentivize efficiency, and a dividend for people who are efficient. So if you ride your bike and you live in Santa Monica and you don't drive a car and you don't run your air conditioner and whatever, and I drive a gas guzzler and run my air conditioner all the time, you and I get the same dividend check. But the person who spends less on energy gets a much bigger yield than I do. So I'm much more interested in financial mechanics to disincentivize inefficient systems, and I'm less inclined on the political side. Yeah.
That makes sense. Yeah, I think a lot of people don't, because we go back to incentives. We talked about that several times on this program. The thing is, when Russia invades Ukraine, there's this backlash on social media, and everyone wants to support Ukraine, and I did too. Like, I totally understand that. But I think what a lot of people didn't understand is at this point, I believe 40% of Germany's oil was coming from Russia. Russia doesn't invade Ukraine unless that is the case. And I think a lot of people didn't understand that, because it doesn't matter how much ballyhooing happened. Last time I checked on the news, like, we've completely forgotten about this invasion. I don't see hardly anything on the news about it anymore.
Well, but yeah, I mean, listen, it's a whole other conversation, because first of all, Russia doesn't invade Ukraine if the United States doesn't break the 1989 agreements. I mean, there has been an incremental fucking with Russia by the United States and Europe since 1989.
Yeah.
And I can assure you that if Russia was looking to build an alliance and military bases in Mexico, that the United States would not be happy about,
of course,
and probably would act. So, like, so here's I'm just going to give you 2 seconds on this.
Yeah.
My biggest frustration, whether it's with China, Russia, and the United States, all three, is that all three countries love to go to war with each other and use other countries' bodies as the soldiers.
Yeah.
So if the U.S. and Russia want to go to war, then why don't they grow a pair of balls and do it?
Yeah.
Why do the Ukrainian people have to get slaughtered? Because America's too much of an effing pussy, and so is Russia, to deal with the fact that they want to have a war.
Or the Afghan people before that.
Or the Afghan people. Or the Iraqi people.
Or the Vietnamese.
Or the Yemeni people. Or the Sri Lankan people. Or the Filipino people. Or the Ethiopian people. Or the Syrian people. Or. And then what happens is then they're like, oh, the Ukrainian people, the Russians are evil. Look what they're doing. And then there's this presumption that the American and European contribution, it's like, if I stick you in a cage and jam a stick in your eye for 30 years, and eventually you leap out of the cage and try to choke me to death because I've been keeping you a cage, and then I'm like, look at Michael, he's attacking me, he's a maniac, and I pretend that I wasn't trying to choke you out for the last 30 years. Well, America, like, if you really want to solve it, Europe should exist from Moscow to London. Okay? Moscow, to your point earlier, won World War II. The reason, and Germany and Russia are natural allies, both in trading, not just on energy, but across the board. Italy and Russia are natural allies. France and Russia are natural allies. But the United States has deliberately leveraged its relationship with Europe to ensure a space and a gap between Russia and the rest of Europe.
Got it.
So, I mean, there's just it's not. If you're feeling like one of the superpowers is a bad guy because they've invaded a small country you don't understand or know much about, chances are that small country that you don't know much about is being used by a couple of superpowers, maybe all three, and certainly two of the three, as an excuse as a way to use other people's blood for their ego.
Right. Right. Yeah, definitely.
So it's not that you shouldn't feel terrible for the Ukrainian people. It's that it's not only Russia's fault.
Yeah.
Yes, it's Russia's fault, but Russia is not uniquely guilty of what's happening in the Ukraine. It was deliberately created. You know, when the United States invaded Iraq, did the world, when the United States overthrew Libya, like it's just another domain of hypocrisy.
Right. There you go. Yeah, we could go into that for the entire thing about the whole neo-Nazi.
Different podcast altogether.
Yeah, the whole neo-Nazi thing that Putin was trying to say was going on and all that kind of stuff. But yeah, it's very, very interesting. All right, so let's keep going. A couple more things. This is a big one. A buddy of mine, he owns Ignite. I'm sure you Ignite. They used to be a cannabis company, and they switched over to vapes. And the reason why he told me is Dan Bilzerian. He told me he switched over from marijuana to just doing vapes and nicotine is because the federal legalization of marijuana was happening a lot slower than they had anticipated. In your estimation, what do you think about that whole thing. It looks like there may be some headway as far as that's concerned, but the federal legalization of marijuana, I assume you're for it, obviously. What do you think about that?
What do I think about it?
Why is this taking so long?
Why is it taking so long?
Yeah.
I mean, I think the primary reason it's probably taken so long is because the alcohol and tobacco companies have not figured out how to make sure they control it.
Right.
Like as soon as Budweiser and Philip Morris figure out how to get the right position on this situation, I think it'll move very quickly.
Yeah. You think?
I mean, that's going to be a short answer after many long answers.
Yeah. Are you still involved in that space?
I am not.
Okay.
I was not. I was working on an industrial hemp project in Southeast Asia, but the pandemic rendered that pointless.
Yeah.
You couldn't go to Thailand, so what's the point?
There you go. Yeah, those were 2 not fun years right there. I want to ask you about, so inflation has been another topic that we've had before, and we can go all the way back to the 2008 crash and the 2008 crisis, and we can talk about quantitative easing, and then we take the Fed rate and we lower it as low as we can, and nobody wants to be the one to raise the interest rate, and every time we're about to do it, the Fed makes another announcement. No, we're not going to do it yet. We'll do it later. And that may have been, or probably most likely is, a contributing factor to what we're seeing now as far as inflation is concerned. President Ratigan, what do you think about this whole situation as far as the Fed rate, inflation? What would be your solution?
Increased collateral requirements across the board. Leverage, again, it goes back to leverage, whether it's leverage in the housing market on an individual level or leverage in the banking and the corporate markets. Leverage is the root of it. Leverage determines the speed of the economy more than interest.
So
if you increase collateral requirements, if I make a bigger down payment, if you want to buy a house, I guarantee the housing market will cool down more than if I raise mortgage interest rates by 100 basis. If I make the down payment on a house 35% cash, I mean, that would probably be obviously too catastrophic. But that point is that's a more powerful influence on the speed of the economy and on inflation is hard money collateral.
Got it.
The reason inflation is running the way that it's running is because of the looseness of the credit markets, going back to your reference to the money printing and quantitative easing or the low interest rates, but also the ability to acquire assets for very small amounts of collateral using credit.
Put their skin in the game, so that the kind of the average, the
just bump the collateral requirement, yeah, and everything will. That would be the lever that I would use.
Got it. Excellent. Okay, this is this could be President Ratigan or not. This is up to you. This could be just a personal question. You brought up one time, so my background is in physics, and you brought up teleportation on Truth or Skepticism, and you were very, very gung ho about this. So I don't know how serious you were. But,
very
okay.
Very
so let's go into your description about teleportation and what you were very bullish on it.
Well, I mean, it's my number one project. And so,
here we go. All right.
I mean, but again, remember, teleportation has existed for decades. This is not this is one of those things where the technology already exists. It just only exists at a subatomic level.
Yes.
And it just needs to be scaled.
Yeah, that may be difficult. So just to kind of reiterate for people who don't know what he's talking about.
Think about what that would do to the supply chain.
Of course. I mean, it'd be incredible. But just to go back to what you're saying before.
Think about what that would do to demand for fuel.
Yeah, you're right. If we could teleport.
Petroleum demand. Think about how good that would be for the air quality.
Yeah, incredible. Yeah. Teleportation.
Think about the parties you could go to.
There we go. I could skip the line, just get right in. Give me right.
Pop in Paris, pop in Bangkok, back to your own bedroom in Las Vegas.
Yes.
Go to Chile, pop to Santiago.
Yes. So the benefits of teleportation, I'm going to agree with you. However, I think what's happened is like from a semantic standpoint, what they're talking about is the teleportation of information beyond the speed of light. So if you take two, what you're talking about is teleportation over the course of the last few decades. If you take two electrons from the same atom and you send them down different pathways. If one of them turns out to be spinning in counterclockwise, the other one spinning clockwise, and the realization of that information gets passed at faster than the speed of light. The Chinese have actually replicated this. They've shown this to be an absolute unequivocal fact. And if you were to extrapolate this to the opposite ends of the universe, which the universe does not have ends, you would still have the same function. There's some people that believe that there's another dimension upon which the two subatomic particles are actually connected and they're much closer in space. There's a whole bunch of different theories about what this is. And so the idea is, well, if we can extrapolate information at faster than the speed of light, wouldn't we be able to teleport actual physical matter? And we're still a couple of steps away from that one, Dylan. I'm not sure if we can get to that.
It sounds like you might be qualified for a job at my teleportation company.
I definitely would.
Quite educated.
Listen, if we can teleport to some parties,
you have a lot to contribute.
Yeah, man, this is great. I mean, you just kept going on and on about this with Tom.
No, but I mean, because I fundamentally believe. I don't have to believe.
Yeah,
I know that one of the predominant force in the world is fields of energy.
Yeah.
And the energy fields really dictate more outcomes than anything else.
Yeah.
And what you're talking about with the subatomic experimentation that's proven this, that you just referenced, is physical evidence of the influence of energy fields.
Yeah.
Right. And if we know energy fields exist and we know that there's physical evidence that energy fields can teleport at a subatomic level, then by definition, it's possible at any level. I think that the primary barrier to it is our own state of consciousness and the way we think tends to be very mechanical.
Yeah.
And so we're like, well, mechanically, what are you going to take my nose off my face and then put it back on when I get to Tokyo? Like, what if you put it on my forehead? Like, it'd be all out of whack. But if you move out of that mechanical brain and into a field of energy, a quantum field, it's a totally different set of potential outcomes.
So there is actual experimentation as far as information is concerned. Basically, you'd have two quantum computers and they would have electrons from the same atom, and one of them would be on the planet Mars and the other one would be on Earth, and you'd have instantaneous communication between the two computers. That is something that theoretically not only is possible, but might actually be feasible in the next 100 years. We could see something like that happen. As far as what you're talking about, that's information though. As far as physical matter, now we're talking about like 10 orders of magnitude more energy. Like the amount of energy that it would require for us to open a wormhole between us and Proxima Centauri would be more than all the energy in the entire solar system. So I don't know. That may be the actual.
You're being very mechanical again. Now I might have to fire you.
Yes, there we go.
You might have just lost your job.
I apologize. Yes,
with your mechanical thinking.
Me and that fucking math, man. That's the problem. That's awesome. All right, man. We have to wrap up. Dylan, this has been awesome. You are, somebody I really look up to, so I'm really happy to have you on the program. Hopefully I can have you again. I would love to have you and Tom on the same time and actually do a Truth or Skepticism and let me just moderate one. I think that would be really awesome to have you. I got Tony coming on. We're going to talk about the old days. I don't know. You've heard the story about Tony getting thrown through a wall when he was a pit trader back at the, like stuff like that. I want to go over that because this whole financial news and that whole time period, all the way to the 80s, 90s, this is something that's always been really fascinating to me. So I'm really happy, excited that we were able to.
One thing I'll leave you with, I'll leave you with one war story from that era.
Yeah.
If I can.
Yep.
So there was a trader at Salomon Brothers, I believe it was, a bond trader. His name was Sugihara Myojin, Japanese guy. He was known as Sugar on the trading floor. And for a few years, he was responsible for more than 50% of the company's revenue.
Wow.
So all of Salomon Brothers made $1, and 50 cents of that dollar came from Sugihara. So he would lose his temper sometimes. And on those trading floors, you remember there were those huge data screens on the wall. And Sugar was the only person, I believe, probably in the history of Wall Street, at least in the New York trading floor culture, which is different than the Chicago culture of Tom and Tony. But in some ways the same.
Yeah.
But Sugar was the only trader in the history of New York who was basically, from time to time, he would pick up a computer monitor or a object of some kind, could be a garbage can, and would propel it in some way using physical force in the direction of the data of the trading wall, the trading board, which is like 20 feet long and 5 feet high, and shatter the entire board so that it'd be like Shaq breaking the backboard times like 1,000.
Yeah.
And with no like if anyone else did that, you'd be fired. They'd probably call the cops. He would do it, and they would just bring in a new trading board, and no one would say anything. So, the thing is, Wall Street worships money so absolutely, because the other person was Mike Milken. Mike Milken was responsible for half of the revenue at Drexel Burnham.
Yeah.
And so, imagine a company with 1,000 or 10,000 employees, where one of the employees is responsible for half the revenue. That one employee inevitably will behave like a lunatic.
Yeah.
That's some evolutionary psychology.
Yes. I'm just curious. Did you ever cover Paul Bilzerian?
No.
Do you know what I'm talking about?
Yeah.
The corporate raider. So his son, it was a guest on this podcast a couple of weeks ago. I don't know if you've seen. He's like one of the biggest influencers in the world. I was always interested. I guess that would have been in the 80s, so probably before you got involved.
Before my time.
Yeah. Awesome, man. Well, hey, listen, it was great to have you on. Now, you said you have a short stack you want people to subscribe to. Can you talk a little bit about
Substack? We're going to be launching a Substack. Dylan Ratigan on Substack. It's be more content like this, I suppose.
Awesome, man. Awesome. Very cool. And we can catch you every Wednesday on Truth or Skepticism on the TastyTrade Network.
That's correct. Truth or Skepticism, me and Tom, every Wednesday at 2 p.m. Eastern Time.
It's funny because I feel like Tom has become the skeptic some of the times. And
I know.
You're the one. Like, I really feel like you were the one.
We've been doing it so long that now he's become the skeptic.
Yeah, you kind of flipped roles. Like, you're the one with the optimism, and he's the one like, hey, listen, teleportation. And he's like, no, all these people need to go back to work immediately. Productivity is gone. Go back to work. No one can work from home anymore. Like,
I know.
Me and Tom disagree on that one. I actually think the work from home thing is just fine. Awesome, man. So great. And then where can we find you on social media? Your Twitter?
Dylan Ratigan is really the only thing that I should be better at it than I am, but that's what I got.
Okay.
As Dylan Ratigan on Twitter.
We want to hear more from you. We want to see you on Instagram.
All right. I'll figure it out.
Where are you living now? Are you in Italy?
I am. Yeah, I'm living in Italy and then coming back here for work and social and family reasons. But Italy is home base.
Okay. Beautiful. Beautiful. Well, hopefully we can all meet up in Chicago at some point, or you guys can come out here to Vegas. We had Tom's birthday party here a couple months ago. It was a blast. So hopefully you can.
I would love that.
Yeah,
I would love to be with you and with Tom at the same time. That'd be great.
Beautiful, man. Put you right here at the table. It'd be the best, man. I think it'd be a great time. Awesome. Hey, man, thank you so much for all the people who got on here. Listen, I know we zig as far as we can zag. We got an incredible member of incredible financial mind, a credible political mind, a credible broadcaster here and author in Dylan Ratigan. Compared to all the other people that we got, guys, we've had physicists on here. We had the flat Earth debate, by the way. They're coming on soon. We've got Ty Lopez coming on later this week. We got Wes Watson coming on. We got Andrew Tate coming on. We have so many great people and also so many of the fantastic female influencers that we got coming on this week. I just talked to Sophie D. We're probably going to have her coming on. So I want to thank Dylan Ratigan for coming out here once again. Hopefully we can have him in studio in the future. You guys make sure you check him out on Twitter. For the rest of you guys, make sure you like, share, and subscribe this video. Also, for those of you on Apple Podcasts, please write me a review. I very, very very much appreciate it. I love all the stuff that you guys are writing in the comments. I cannot wait to get back to this. Hopefully we're coming up on 50 episodes. Hopefully we got another 50 more and a lot of exciting guests coming your way, and we will see all of you next week.